Welcome to Manifested e-learning platform. My name is Emily Ngwiri, and today, ladies and gentlemen, we are going to discuss about business and data analytics, BDA, April 2024, question 23. It reads as follows. Sunrise Limited manufactures office cabinets for both local and export markets. The following data relates to the cost of production of an office cabinet. You can see the selling prices have been given. The selling price has been given. The variable cost per unit has been given as 5,000. Total fixed cost has also been given as 50 million. You are required, in batches of 1,000 units, determine the break-even point in units using a graph. Indicate the profit zone and loss zone in your graph. That's part A. Part B, the management of Sunrise Limited is evaluating various production and sales levels to determine the profit after tax. Assuming a tax rate of 30%, plot a graph depicting revenue and profit after tax. C, the management of the company is evaluating the effect of selling at various percentages above the break-even point, BEP. Beginning from 0% and in batches of 5%, change point up to 50%, plot a graph depicting target revenue, target profit, and tax and margin of safety. So what we're going to do, part A, we're going to start looking at it right over here. And we want then to now develop information or input data. Like so. Once we have the inputs, we'll need to get the selling prices over here, but put that value there, like so. And of course, because it's following each other, we just put it like that. Or there's a space there, so you can just link it with this one here, like so, 10,000. There, 10,000. Then we proceed on to put the variable cost per unit, like that. And we just link it with, because it's following from that value, just drag it down like that. 5,000, you can see it's 5,000 right here. And then we also need then to put the fixed cost. Following each up like that. Excuse me for this. Delete. Like that. Why is this important? Because we are talking about, we're going to create a table right over here that is going to have the quantities produced in batches of 1,000 units. We're told to determine the break-even point using units. So what we're going to do is that we'll have the quantity, QTY, allow me to use that quantity. And then we'll need to generate the total revenue over here, TR, that. And then we will talk about total variable costs, TVC, total variable cost. And then we'll also analyze the total fixed costs. That. Before getting the total cost, TC, total cost. So total revenue, at the point where we have break even, we should be able to have total revenue equaling to total cost. So we'll start with the quantity. We've been told in batches of 1,000 units. So we start with 1,000. That. So from 1,000 plus 1,000, I have to get 2,000. That. Determine the break-even point in units using a graph. Indicate the profit zone and loss zone here. So here we just increase it like so. Maybe perhaps you can just go up till about, you can just go up to 20,000. Let's go up to 20,000 right there. And because we need to be accountants, we need it to be in the accounting format like that. So the total revenue is just going to be, we're just going to pick the number of units times the selling price. pick the number of units, and then we multiply that with the selling price per unit. And this one we lock it. How do we lock it? We press F4, like that. Some laptops, some PCs might require you press the function button, which is Fn, and then you press F4. So long as you have these dollar signs, it shows that you've locked it in. Why do we want to lock it? We want the selling price to remain stationary, but these ones will be running. So 2,000 times 10,000, 3,000 times, so we want the 10,000 to remain stationary. So we say we're getting 10 million, like so. And once we wait for that cross, double click it, it all comes down like that. Now to get the total variable cost, we'll pick the total, we'll pick the quantities produced, which you're saying is that one there, and then we multiply that with this total variable cost per unit, that one there, and we lock this one here. So press F4, like that, so the dollar sign can remain like that. So 5 million. Drag it down like so. Once we have the total variable cost over here, we can be able to pick the total fixed costs. Total fixed costs do not change with the level of activity. So just pick 50,000 like that, and then we just enter, put it down like that, drag it down like so. And we have the total variable cost. Please note that the total fixed cost, guys, I'm smiling in my heart, knowing that it doesn't change with the level of activity over here. These are wrong. That's what most people do. We are saying that we are professional accountants. We know that this one does not change the level of activity. So we are saying it's just going to be that value, and we lock it, F4. Once you lock it and we double click it like so, it's not supposed to change. It's supposed to remain stationary. And we're saying that the total cost right over here is going to be the total variable cost plus the total fixed cost. We just add total variable cost plus total fixed cost to get the total cost as 55 million, like that. And then we drag it like that. You can see the values of the outputs that have actually been given to us like that. So we'll need then to construct a break-even chart right over here that includes the total revenue, the total costs, the total variable costs, and so on and so forth like that. So that now we can identify area of break-even. So we are saying that we will pick this entire graph like so. Highlight, go to insert, go to recommended charts over here, and you can be able to see, and this is the chart that is given to us right here. We can just put it right somewhere just beside it over here and move further to the right like so, and maybe perhaps expand it like that up to there. That. We know that total revenue will be equal to total cost at that point where we are saying it's going to be break even. You can see the total cost is that point, is that one there, and you can see it's even actually highlighting that that's the total cost. And the total revenue is the blue one here. You can see the blue one here is total revenue. So at that point where we have total revenue being equal to total cost is where we are saying that we'll have a break even. And you can clearly see it's around 10,000 units right over there. And you can see the 10,000 units, the total revenue would be equal to total cost over here. So we'll need to indicate profit zone, loss zone. So how do we put it? We click the graph right over here, come to design right over here, or format, is it format? Yes, come to format. Then we click this text box here. Click on it and say we want a text box somewhere here. And we can call it profit zone. Profit, excuse me for this, profit zone. That, you can indicate it right there. Did they give a space here like that? Profit zone. And here we can be able to now insert also still another text box. Come to format, come here text box, put in here loss zone. Just put it like that. Loss zone, because it's not properly placed like that. Let's put it like that. And you can see that we've actually indicated the profit zone and the loss zone over here. Of course, this is the total variable cost, and that one may not be able to really help us to get the profit or loss zone, but at least it assists us to get the total cost, which we now would be able to equate with the total revenue at this point over here. And you can see that at that point is where we're getting total revenue is equals to total costs there. So let's move on, proceed on with part B. The management of Sunrise Limited is evaluating various production and sales levels to determine the profit after tax. Assuming a tax rate of 30%, plot a graph depicting revenue and profit after tax over there. You've gotten that for 8 marks like that. So what we do is that we'll need to come up with part B, because this is part A, so part B you can put it right over here. B, revenue and profit after tax. It's right here, depicting revenue and profit after tax. And profit after tax. Revenue and profit after tax. That, bold, you can put like that. This is the input, control B, that. So what we do is that we'll need to first of all start with the quantities, just in a similar way that we did over there. So we'll need to first of all put the quantity like that. Then we'll need now to put the total revenue, total cost, total revenue. We need to put the total revenue. Then we'll need now to put in the total cost, the TC, like that. And then we put the profit before tax, PBT, to represent profit before tax, PBT, profit before tax. And then we can be able to have another section where it have profit after tax, PAT, that. So we've been told what? That the management is like that. So we can start with from 1,000. We still increase it by 1,000 units each time. So here we have 1,000. So it's because it's following each other. We can just sort of drop it down over here. Was there a limit to where we were supposed to reach? Let me just double check over here. So delete that. There is no limit over here. The limit is actually right over here. So you can come to 20,000 units like that. And then the total revenue, because it's following each other, like that, we just drag it over here, like that. And of course, we'll need to put the comma format, 2 decimal places as well here. Also need to put the comma format right over here, 2 decimal places like that. Just make sure at least it looks present. Excuse me for that. Excuse me for that a bit. Looks presentable like that. So these ones here can be spaced out like that. Yes. The total cost. We pick the total cost because I've picked it from here. The total cost is right here. So we just drag it like that, shift, just drag it down like so. And we are saying that, of course, we need it in the accounting format. Just pick one over here, format painter, to make sure that at least it's the same way, the same format as the total revenue, like that, and consistency with above here. The profit before tax, we are saying is just going to be total revenue minus total cost. Yeah. So just pick the total revenue minus total cost over there. Like that, we just can see it's a negative value over here. We need to put it in the proper format like the accountants, like we as accountants over here. So we come to more number formats right here like that. And we want to put it in braces or in brackets like that. And this is the proper way to put it like that, in brackets like that, so that now it can show that that's a negative value. And I need to also make sure that these other values down over here are also going to be in similar format like that. So if I just double click like that, so excuse me, like that, you can see obviously at 10,000 units we get total revenue minus total cost, where we get the break-even point over here. And then we are saying that we'll need then to get the profit after tax, profit before tax, tax rate. We're saying we're going to be charged how much from the question. So it's going to be that value times, and we can see right over here in part B that we have a tax rate of 30%, to plot a graph over here, times 0.3 like that. Just pick it like that. Remember, it has to be properly presented that in the accounting format. So just format painter right here again, and I just drag it down sort of like over here, like so. Sorry, so this one was here, and then we drag it down over here like that, like that. So still we're getting to that point. This is profit after tax. We're getting profit levels over here. So the question is what? Once you've done that, the margin of sales is evaluating various production and sales levels to determine the profit after tax. Assuming tax is 30%, plot. The key word is to plot a graph depicting revenue and profit after tax. Revenue and profit after tax. So I'll pick the quantities, those two, profit after tax, and that one, using the control button. What I'm doing is that I'm highlighting those two, no problem. Then I, holding control down, I pick the profit after tax. I pressed control down, I pick the profit after tax, like that. Come to insert, recommended charts, and then we can be able to just select the graph that you would actually prefer right there. So you say, okay, over here. So we put it somewhere here, like so. Like that. And you perhaps put it somehow up to there. That, and because obviously see a 10,000 over here, there's no profit, neither loss there. And change the chart design and put it perhaps maybe something similar to another graph over here. That is if you want. Select whichever graph style that you want. So it's always good to label. Did I label this? I didn't label this. This should also be labeled as well, guys, for completeness. Over here, we're saying break-even chart. This is the break-even chart. BEP chart, or break-even point chart. And this one we are saying should be given to us over here as the revenue and profit before tax after chart. Yeah, so we just put revenue, profit after tax. So revenue and profit after tax. That are there. So let's see what we're told under part C rather. The management of the company is evaluating the effect of selling at various percentages above the break-even point. That's fine. Beginning from 0 and in batches of 5% change point up to 50%, plot a graph depicting target revenue, target profit after tax, and margin of safety right there. So we are saying part C, we can do it down over here. C. That you can say target revenue, profit after tax. So and profit after tax. Revenue and profit after tax. So what we need to do is to try and identify the break-even point in, of course, units. That should not be able to change. So BEP, break-even point, units, BEP units, we obviously know it's 10,000, as we've indicated right over, it's 10,000. So just pick the 10,000 here. That, so we don't change that. And we'll need to see up to what level. So we'll need to just maybe perhaps go down arbitrarily like that, 10,000 units. And then let's see, from 0%, and in batches of 5%. So we want to increase it by 5% up to 50%. So we want to increase this one plus that one times a factor of 5%, 1.05, that 10,500. So this is 5%, 10%, 20, 25, 30, 35, 40, 45, 50. So we should be able to just go up till that level there, over there. I'll explain. We want, or the examiner is asking us, to start from 0% over there. And then we see at what point we can be able to increase. So in this first case, should be plus that value times 100 times 100%. Still remains the same there from 0%. But now we want to increase it to 105%, a factor of 5%, plus that one times 1.05, plus that one times 1.1. Now it's going to 10%, times 1.15, 15%, 20%, 25, 30, 35, 40, and so on and so forth, like that, up to 50%. So here it's 0, 5, 10. I'm looking at this part over here, 10%, 15%, 1.2, 20%, 0.3, 20%, 1.25, 1.3, times 1.35 times 1.4 times 1.45 times 1.5. It's just 10,000. Just increase it there like that. So it's from 10,000 through to 15,000 there. And what is this? This is units with percentage up. Units with percentage up. Sorry. With percentage up. Then here we talk about target revenue. Target revenue. We'll obviously need to multiply it with the selling price over there. Selling price. So we pick the target revenue, or rather we pick this value and multiply it with the selling price right here. And then we lock it like that. We enter, you can see what we have over here as the target revenue. Target revenue. Once we have the target revenue given to us over there, we can be able to just determine the break-even point, BEP. And to determine the BEP, we are saying that the break-even point will be given by, we want the point where the total revenue minus total costs is given to us there. So we'll pick total revenue, and then we subtract we pick the total revenue minus that value there. We don't get any value there like that. And then we can be able to proceed over here. We pick this value, the target revenue, minus that value should be able to give us 5 million. 5 million should be total, the current value, excuse me for that, minus the target revenue like that. So you should be able to get those values like that. And you can proceed on and drag it like that. And you're seeing that it's going to be, so it's going to be that value minus the original value. So we'll need to lock that one. That's what we need to do. So that value minus N57, we lock it F4, because we want that to remain stationary. Then we just drag it going down like that, and we can be able to clearly see that this is where we have the, of course, the break-even point. It's at 10,000 units like that, not 10,500. It's at 10,000 units. Then we pick the total costs. And for the total cost over here, we are saying the total cost is, we will pick the number of units and we multiply that right there. We'll multiply that with the variable costs, that obviously that one times the variable cost, and we'll need to lock it because we want it to remain stationary, F4. And that one should be put in brackets like that, and then we add the fixed costs, add that, and then we add the fixed costs. Where the fixed costs are up over here in our original input data here. And we lock that information like that. So F4 there, so we have that and we drag it down like that. Tail lock 10,000 units. Yeah, it's okay. So once we have that, then so we'll need then to try and identify the costs. So it should be the units with percent up, this one here. We are trying to check not on 10,000 units, we're trying to check with the percentage up, because the question is asking us over here, the management of the company is evaluating the effect of selling at various percentages above the break-even point, beginning from 0 and in batches of 5% change point up to 50%. Plot the graph depicting target revenue, target profit after tax, and margin of safety, like that. So we want the percentage with up over here. That's what we should be able to consider, like that. So sorry about that. Over here we drag it down like that. Now we get different values like that. And then we get the profit before tax, PBT, and then the profit after tax there. So the profit before tax is going to be the total revenue minus total costs, total revenue, target revenue minus total costs here, that. And if I drag it down like that, of course it will pick the values. So just highlight there like that, and you can be able to see the total costs that we have over here. Let's proceed on to get the target profit after tax. Target profit after tax. Target profit after tax, it will be plus that value after tax times 70%, because we've been given 30% as a tax rate, times 0.7. That. I got the values given to me like so. So those are the values that I have given to me like that. And now we've been told to plot a graph that shows target profit after tax, target revenue, and so on and so forth. So in this case, I may see ourselves trying to look at or trying to put a secondary axis over here. So we'll just plot from right over here all the way, or like that, like now over here like this. Of of course these ones should be, of course, like that. Excuse me. That. Insert recommended charts, and we are saying that because we cannot be able to pick it like that, so we'll be able to define the charts based on then we can put it inside a combo chart, combination chart, combo over here, and then put the target revenue as a secondary axis. I put the target revenue as a secondary axis. Target revenue. If that's going to make any sense. If not, maybe I don't need to highlight everything. So you can just put those two, BEP, those ones, and the target profit after tax. Let's see what the examiner is telling us to do. They want us plot a graph depicting target revenue, target profit after tax, margin of safety. Target revenue, target profit after tax. Target revenue, target profit after tax. That should be like that. So we start all charts, combo chart, and you can see that one you can put the revenue. That's what we're seeing. So the examiner wanted us to plot that. Target units. We're looking at this part here. Target units. And then we have revenue and profit after tax. Profit after tax. Like that. So maybe perhaps I should have also considered putting the profit after tax as well as target revenue above BEP. I should have put that. So I can be able to input an additional part here. Target revenue above BEP. Is it that one? I should have put this one here also. So it's not a problem. What I can do, I can just select data over here, and then I add, you can see here, I add what? The series name should be that one there, and then the values should be, add these values like so. Is it simple like that? Say okay. This is the margin of safety between that part and that part here. The margin of safety is here. So this brings us, let's just confirm if everything is actually answered to us here. This is part A of the question right here. It's okay. Part B and part C over here. In terms of completeness, let's check the graphs if they are okay. Yes, the graphs are okay. Thank you for being with Manifested Publishers, because you help us to be here. Thank you and God bless you.